We have Jahangir Aziz, the head of emerging markets economics research at JPMorgan, and Ed Yardeni, president at Yardeni Research, now joining in. Gentlemen, great to have both of you here. And thanks very much for joining us. You know, what I want to do is for our viewers, Jahangir and Ed, just play out very quickly some of the key sound bites coming in from Prime Minister Modi and President Trump, and then we'll just sort of jump into the discussion here.
India imposes a 30 to 40 to 60 and even 70% tariff on so many of the goods, and in some cases far more than that. And as an example, a 70% tariff on U.S. cars going into India, which makes it pretty much impossible to sell those cars. Today, the U.S. Trade deficit with India is almost $100 billion, and Prime Minister Modi and I have agreed that we'll begin negotiations to address the long-running disparities that should have been taken care of over the last 4 years, but they didn't do that, in the U.S.-India trading relationship, with the goal of signing an agreement. And we want, we want a certain level playing field, which we really think we're entitled to, and he does also, in fairness. So we're going to work on that very hard. India's been, to us, just about the highest tariffed nation anywhere in the world. They've been very strong on tariffs, and I don't blame them necessarily, but it's a different way of doing business. It's very hard to sell into India because they have trade barriers, very strong tariffs.
आज हमने द्विपक्षीय व्यापार को 2030 तक 2 गुना से भी अधिक बढ़ाकर $500 बिलियन तक पहुंचाने का लक्ष्य निर्धारित किया है। हमारी टीमें एक पारस्परिक लाभकारी ट्रेड एग्रीमेंट को शीघ्र संपन्न करने पर काम करेगी। भारत की ऊर्जा सुरक्षा सुनिश्चित करने में हम ऑयल तथा गैस ट्रेड को बल देंगे। ऊर्जा इंफ्रास्ट्रक्चर में निवेश भी बढ़ेगा। न्यूक्लियर एनर्जी क्षेत्र में हमने स्मॉल मॉड्यूलर रिएक्टर्स की दिशा में सहयोग बढ़ाने पर भी बात की।
Today, the Prime Minister and I are announcing a framework to strengthen those ties even further economically, and the U.S.-India Compact for the 21st century is a historic initiative that will deepen every aspect of our partnership and our friendship. Starting this year, we'll be increasing military sales to India by many billions of dollars. We're also paving the way to ultimately provide India with the F-35 stealth fighters.
Okay, well, Jahangir and Ed have been waiting by. Gentlemen, thanks for waiting, and we just wanted to play some of those sound bites out. Jahangir, to you first. Lots by way of headlines. These reciprocal tariffs have been delayed, and of course, there is the India-US bid as well. You know, what did he make of it at a broad level? Then we can get into specifics.
Look, I mean, this has basically been a Trump strategy for quite a while, right? I mean, you saw that being playing out in the case of Canada and Mexico, where he imposed the tariffs on things that were unrelated to economics, on border security, on drug trafficking, and then negotiated down to a delay of about a month. We'll see what happens to that. I think the reciprocal tariffs, the way in which it is being interpreted in the press, the news reports, analysis that we have seen, I don't think is exactly the way in which the Trump administration sees reciprocal tariffs. It is not just the fact that, well, India has X% of tariffs on US-made goods, and therefore India faces the threat of tariffs being raised to that level. I think if you look at the text of the executive order and the memo that came out today, when the US administration talks about tariffs being imposed to address unfair trade practices, they include regulatory policies, they include industrial policy, they look at FX, and they look at VAT differences. So I think the market needs to get used to the fact that when the US is talking about reciprocal tariffs to address these alleged or perceived inequities in trade practices. They're talking about much more than just tariffs being imposed. They are talking about things like VAT. And if you bring VAT into play, in the case of India, that quote unquote cost differential or tariff cost differential widens significantly and impacts many more items than just looking at isolated items, which may be 50, 60, 70%. Look, I mean, India does not sell any advanced motorbikes in the US. So if US imposes reciprocal tariff on motorbikes, don't think it really matters. But if it is a generalized reciprocal tariff that takes into account the differences VAT, that will matter.
No, absolutely. So it's not just about the rate on certain products, but it's a combination of things. But
Yes.
for now, Jahangir, the question is, should markets heave a sigh of relief? That maybe, as you said, this is President Trump's style. I mean, to bring people on the negotiating table, and
Right.
now it's been delayed. So
It hasn't been delayed. I don't think it's been delayed. I mean, if you go back to the executive order that was signed on the first day, that was an executive order that instructed the Department of Commerce, Treasury, and USTR to come up with a comprehensive plan about what to do on the trade side, right? That due date was April 1st. I think they're sticking to the due date of April 1st, and nothing stops them from announcing things in between. So I don't think there's a delay. What I think has happened is that the market's perception that the trade policy this time around will also be driven by the same considerations as in 2018-19, i.e., focused on China and some Asian countries like Malaysia and Vietnam. That has changed because the first set of tariffs was on USMCA countries and on reciprocal tariffs. And the objectives of tariffs have changed. It is no longer about just leveling the playing field on perceived cost differential. It is also about other things like, immigration, etc. But importantly, it is also about other perceived differences in trade policies. And, we need to get used to the fact that could well be much more widespread than what we saw in 2018-19.
I'm so glad, Jahangir, you brought up that point, because it's not a tit-for-tat number just on the import duties. It's so much more, like you said, which is why I'm trying to understand. I mean, are markets getting a little ahead of themselves in rejoicing the fact that, okay, there was a delay between, Canada and Mexico, so they think that this will be negotiated, it won't hit that hard. For instance, I'm trying to figure out, the Hang Seng has rallied 15% in the last 1 month. Though, of course, a lot of these trade issues with China still need to be negotiated, and there is some element of reciprocity that China's already announced. So are markets, equity markets around the world, a little ahead of themselves?
I don't think so. I mean, I think it is part and parcel of this broad understanding of Trump trade policy or any policy, right? That these are oftentimes just negotiating positions, and the market, in effect, is shrugging that off, saying that, look, the bark will not be as bad as the bite, and consequently, something which is less aggressive and less damaging will be negotiated, because at the end of the day, there is an impression or a belief, in fact, that this administration ultimately will preserve growth and prosperity in the US and not take it down to a path where that is lost. And I think all of those things are weighing on the market's beliefs that, this is just one part of, this is the way in which things happen. So until unless the market actually sees these actions and what the exact form of these actions are, I think the market this time around is going to wait till that happens. I mean, this wasn't very different from 2018-19. If you remember, Lighthizer started the investigation sometime back in 2017. And if you look at every indicator at that point in time, none of the indicators showed that things are going to be as bad till the actual taxes on, actual tariffs on China were imposed. So I think just like that, I think they are going to wait till they see the writing on the wall. I don't think people are going to preempt it and try and take positions before that, because there is clearly, many ways in this administration can take these policies, and we've seen that play out. So I can't blame the markets. If that's what you're asking me to do. No, the markets isn't.
No, I was just asking. So I think you answered, Jahangir. You said that the bite probably won't be as bad as the bark, right? That's the way to understand this.
No,
right?
I'm saying that's what the market's perception is. I'm not saying that it won't be. All I'm saying
but that's
is
the market perception.
That's correct.
Okay, all right, I got that, Jahangir. Let's get Ed into the conversation as well. Ed, what do you make of the overnight developments? We here in India, the optimists will say maybe Trump's not going to be, as tough on us as the rest of the globe. But what is your understanding of, what you heard overnight and actions ahead?
Well, I think it's very important that there's been a semantic distinction in describing tariffs. It's been described as reciprocal rather than retaliatory. In other words, the Trump administration isn't looking to raise tariffs to punish other countries and then wait for them to retaliate even more, which is what happened in the early 1930s. In June 1930, when the U.S. passed the Smoot-Hawley tariff, those were retaliatory tariffs, and everybody just continued to raise tariffs. By calling it reciprocal, the administration's reminding us that the Smoot-Hawley tariff in the 1930s was reversed with something called the Reciprocal Tariff Act. And the idea of reciprocal tariffs is that you match them and then you negotiate them down. And I think that's clearly the goal here of the administration, is to get people to the negotiating table first and foremost by raising our tariffs to match their tariffs, and then hopefully to negotiate them down even before the tariff is implemented. So it's a very fluid situation. And I think on balance, the market's starting to realize, hey, this may end well, not badly.
Absolutely. Got that. Jahangir, with India and US, what we heard, right? India will buy more oil and gas, defense F-35s, but then the foreign secretary said, well, it's a proposal, nothing, there are lots of steps to cross, etc. But the one thing firm, which was this oil and gas, which we got to buy anyway, right? And that there was a big number, etc., which was put out. And then there was a talk of a trade deal by fall. Maybe we'll try to do something. What did you make of all of it? Specifically India-US.
Yeah, so look, any trade deal, anything that lowers trade barriers is good for both countries. We know that for a fact for many, many centuries, actually. So clearly, if there is an understanding that certain things or certain goods will be traded freely, U.S. has a number of free trade agreements across the world. And if you look at the countries that are engaged with the U.S. in the free trade agreements, they've mostly benefited from it. From Japan to Vietnam to Korea. So any kind of move towards lowering trade barriers is good in principle. Again, the devil will always be in details, and many detractors will say, well, the devil is always in the details, and that's what you should be worried about. But in general, anything that lowers trade barriers is a good thing. What and I know that governments like to promise, that, the trade deficit or the trade, really, this thing will, rise to X billion dollars and things like that. Those are great numbers to put out as, aspirational numbers. But at the end of the day, we have to realize that trade, like growth, like inflation, like everything else, is an endogenous variable. It reacts to policies, and it reacts to prices, and how that evolves is where things will go. So in principle, yeah, we should be striving for lower trade tariffs, lower trade barriers. Trade barriers have been increased in India over the last 10 years. They need to come down, and lowering trade barriers almost always ends up in benefiting both sides.
Jahangir, just very, very quickly, we've discussed trade a fair bit. But, in the last couple of weeks, we've also had action both on the fiscal side here in India and on the monetary side. And everybody tells us at the end of the day, tariffs is one part of it. The Indian economy has to chug along and, revive, really, so to speak. What's your view on where this leaves us?
Yeah, I was waiting when you were going to ask that question. So look, we have a budget that was broadly in line with what people had expected. There's a question where the budget should have targeted, half a percentage or thereabouts of fiscal consolidation at this point in time. My argument has been that, the budget framework in India is such that there is no leeway avoiding doing something like that, because that's the way we are structured. And therefore, the burden of any kind of support now falls almost entirely on RBI. We spoke about last time, and I said, time has been ripe for quite some time for the RBI to ease rates. I think RBI will have to continue easing rates. We have another 75 basis points of rate cuts priced in, and this was way before the rate cut cycle happened. But again, macro policies, and I know it is the right thing to say, well, tariffs and global conditions are one thing, and we should not focus exclusively on that. But at the end of the day, fiscal policy, monetary policy, the way it stands, it can provide some help. It can't really be the solution. That's where things stand.
Ed, so where does it leave markets, in your opinion? There is this other thing, Russia, Ukraine, and maybe a peace deal, a ceasefire at least. That'll be big.
Right.
War's been going on for 3 years now, I think, right? If it were to happen. But what's your sense?
Well, President Trump obviously thinks big. And usually when a president comes in, they have a goal of achieving 2 or 3 major pieces of legislation. And then they realize after the first 100 days or so, their political capital is no longer what it had been, and they just kind of ride through the end of the first term. And if they're lucky, they get a second term, and not much happens in the second term. This president has 1 term left. This is his second term. He knows a lot more about Washington. He knows how to play the game much more aggressively, and he has an agenda. I think the Heritage Foundation's Project 2025 is, in fact, the blueprint for what the administration is doing. It clearly was very well thought out, and it's a very determined policy to radically change the way we do business in the United States, especially the way the government does business. And on a global basis, it's certainly not a globalist agenda. It's an American first agenda, but it's not an isolationist agenda either. It's very proactive and very bilateral in nature, and obviously very ambitious in terms of hoping to accomplish a peace settlement between Ukraine and Russia, and coming up with some solution for the Middle East, which ends the cycle of violence.
And maybe, absolutely, and will be good, right, across in that sense, sort of less conflicts around the world. We'll see if something were to happen. I mean, some have said that 20th is when maybe something could be announced. It's a victory day in Russia, so maybe symbolic, etc. We'll see. But those are visuals coming in from, of course, last night. We'll continue to discuss and debate this at length through the course of the next couple of hours or so. But Ed and Jahangir, thank you very much for joining us. I really appreciate both of you sharing your perspective on what's been extremely sort of fast-paced news cycle, which we are struggling to keep up with.